Hey guys, welcome back. Sorry for not getting a video out last night, but Friday night lights are back in Texas. We had a scrimmage with the high school team last night, and one of my boys plays on the JV team. So my wife and I got out to the stadium. Not only did we watch JV, but we stayed for the varsity game. It was such a cool night in Texas last night. Weather was great, and there's nothing better than watching a little bit of high school football. If you don't know about Texas football, I can assure you Friday night lights is real. It is a massive deal here in Texas, and it's just fun to get out with the community. So today, I want to go through what we saw on Friday in the market, because what we saw on Thursday, it was an explosive reaction to the SanDisk Investor Day. It was the catalyst that we needed to see. In addition to all of the other positive momentum that we had, we saw the sector just absolutely explode this past week. Thursday was a reaction, but Friday was a confirmation because SanDisk didn't fade. Micron didn't pull back. Western Digital and Seagate, they didn't pull back either. What we saw were institutional analysts. They spent Friday aggressively rebuilding their financial models for this sector. SanDisk told Wall Street the underlying economics. They covered all of that at Investor Day, and they just showed Wall Street that it has fundamentally changed. Wall Street listened, and they stepped up their conviction on Friday. They stepped it up and voted it with their money that moved these stocks far on Friday. So I want to cover the price action that we saw. I want to break down what we did see on Friday, because it wasn't the entire tech sector that was moving. It was the memory sector. Let me show you what we saw in the NASDAQ 100. You can see it on the screen. It was actually a kind of quiet day on Friday. There wasn't a lot of movement across key players within the tech field. We see the hyperscalers flat, pretty much down, but we see Micron up by over 2%. Take a look at SanDisk down here, another almost 7.5% growth from what we have seen recently. Western Digital was up almost 4.5%. Seagate was close to 6% on the day. This was an explosive reaction to the demand that we're seeing in the market. This is Wall Street voting with their money and confirming that this sector is moving back into a bull run. Like I told you in the last couple of videos, I just had a feeling in my gut that we're getting away from the bearish momentum that we've had through the last few weeks that we saw in July overall. We're moving back into some bullish momentum with this sector, and the price action is showing us that right now. Just take a look at what we saw on Friday. We saw Micron go up by almost $22 a share. It closed at just under $9.72. SanDisk put up over $100 again, on about over 7.5%. It closed at $16.41 a share. And we're seeing in the after hours, it picked up almost $17 more. The stock is close to $16.60 a share right now. Western Digital was up $21.50. It crossed the $500 mark again. It closed at $508. In the after hours, it's hovering right around that $508 a share again. That's excellent movement from where this stock got just pushed down after its earnings. We see it climb right back up over the $500 level, just showing the amount of support that the institutional players have for this stock. And Seagate closed at $973 a share with a $52 gain on the day. And the after hours, it crossed over the $975. This stock is moving as well. We know these storage players are in massive demand for the hyperscalers, and the price action is showing us that right now as well. The SK Hynix ADR, quite frankly, was flat. But a lot of that is due to just the digestion that we're seeing in the Asian market around the massive CapEx and the commitments that SK Hynix is making right now to build out fabs and to build out more supply in future years. So that flat to me is great. And that 166 ADR is a massive entry point for the company, because if you take a look at the price targets that are out there for the SK Hynix ADR right now, they're all closing to about the $300 level or even north of that. I think the average price target is around $300 for that SK Hynix ADR right now. So there's massive opportunity, in my opinion, with that ADR moving forward. But guys, today's video, I just didn't want to focus on the price action. I want to go back and talk about the fundamentals that are shifting underneath the surface that I mentioned earlier. I talked about how Wall Street is kind of rewriting the rules on this sector overall. We're looking at a shift in the framework, in my opinion, and it all starts with a new price target, a new upgrade from Micron from New Street Research, and how they're saying that the cyclicality story with the memory sector is over. So I'm going to cover that report for you. And then I want to show you how the long-term agreements are spreading beyond the big three. They're becoming more of a reality for the sector overall. And finally, let's go through the Q2 13F filings, because some of the headlines out there right now are actually probably a little frightening if you just read it on the surface. I think many of the headlines are misleading with what we're seeing with the 13F filings for Q2, because they talk about liquidation of positions in Micron, trimming positions in Micron with big names. But I actually want to go through and show you what reality showed us in Q2 and where the accumulation was and where the trimming was and where the liquidation was and what it means for the stock overall. So that's what I want to cover today. I want to go through all those big stories and just talk about what we're seeing in the market right now, because overall, guys, like I said, Thursday was a reaction, but Friday was confirmation. And in my opinion, Micron in this sector is getting ready for an upgrade. So if you haven't done it yet, though, make sure you hit like. Make sure you subscribe to Market Signal. I want you to be part of the community. Make sure you do it now. Subscribe to the channel. All right, let's get started. Let's take a look at the first article that I want to talk about, which was this new report that came out from New Street Research. You can see the article says New Street upgrades Micron to buy, says memory is no longer a cyclical story. Let's go through some of the details. So New Street Research upgraded Micron Technology to a buy with a price target of $12.50 a share. They're arguing that the memory maker's current run breaks from the industry's historical boom-bust pattern. And the reason why, it's based on the stock is up 10x since the lows of April 2025, while the production value for Micron measured by COGS is only up roughly 25%. So according to New Street Research, they're saying what is happening today breaks from the industry cycles that we have witnessed in recent decades. They say by 2030, they expect Micron to hold more than $600 billion in cash on their balance sheet and generate more than $150 billion in annual free cash flow when it's described its peak numbers. What I liked even better in these two paragraphs, unfortunately, I didn't highlight, but it says, looking beyond 2030, New Street models a milder down cycle than they've seen in past eras, with a trough of just $18 billion in free cash flow burn and more than $100 billion generated each year across a 4-year downturn. The firm expects memory demand to keep growing quickly, and they model for a 15% annual growth rate beyond 2030. And that's against the historical 10% average that we've seen over the last 20 years. So they are signaling that demand is going to be stronger beyond 2030, significantly outpacing what we've seen in the industry average. Furthermore, they say the valuation for Micron should be higher based on the HBM premium that is not built into the valuation overall, because it deserves a premium according to New Street. It is structurally less cyclical than commodity DRAM. And what is that? What do they think Micron can achieve based on this premium that they have in the marketplace? They say this combination is said it's to imply that Micron will reach a $2 trillion to $3 trillion market capitalization by 2030. Think about that. Today, Micron just once again had passed over the $1 trillion market capitalization. New Street is saying that they're going to get to a $2 or a $3 trillion market capitalization in 4 years. Think about the demand that we see in the market. Think about that, what that will do to the stock price for Micron right now. So that's why they dropped the $12.50 onto the street. And I think we have many analysts right now that are just reevaluating and reconfirming their buy and reconfirming their price targets for this stock. They knew it was just suppressed and undervalued too much in July. We're seeing the breakout. We're seeing the re-rating again of the sector. We are getting into a bull run, in my opinion. And let's look at DigiTimes. They just confirm it again with another signal. They're saying the long-term agreements are stretching beyond the big three. And the reason why is because customers, it's more important for them now to lock in supply than to worry about price. And if we scroll down, you can see it's intensifying. The supply shortage is intensifying with long-term agreements rapidly expanding beyond the big three memory manufacturers. The market's focus is moving away from quarterly price negotiations, and it's moving towards a model that locks in capacity, price bounds, and purchase commitments years in advance. SanDisk demonstrated this on their investor day when they talked about the $94 billion in minimum contracted revenue. They talked about their new business models. There's 10 contracts they have in place and how it's essentially locking up half of their bits in fiscal year 27 and 2/3 of their bits in fiscal year 28. But Samsung has a very similar approach. Samsung previously revealed plans to eventually cover 60 to 70% of its medium to long-term capacity under 5-year rolling long-term agreement models. SK Hynix has similarly finalized about 10 multi-year agreements, and we know Micron relies on these agreements as well. But it's spreading to the regional customers, and that's what this article says. Nanya Technology has noted that long-term agreements now cover 50% of its capacity. CXMT is getting into the game as well, and they are adopting this strategy. CXMT reportedly signed a multi-year DRAM agreement with Tencent worth about $3 billion, as well as a 5-year supply deal worth over $7 billion with ByteDance. We're seeing, obviously, the Chinese memory providers kind of lock up agreements with their own domestic providers and players. And Alibaba, as well, is speculated to sign an agreement with CMXT. So China definitely has a very nationalistic approach overall with these contracts. Could be something we see with the U.S. It could be something we see with Micron as well in the future. Have to keep our eye on that. And if that's the case, that would be a strong kind of bullish flag for Micron. They mentioned YMTC, not a public company yet. There's no known framework deals that we can see in place, something to monitor because we know of their expansion in NAND. YMTC makes up about 14% of the NAND volume today. So once they go public, I would expect that this is the same type of approach that we'll see with YMTC. The underlying catalyst, though, guys, it is clearly straightforward. It is guaranteed allocation that is taking priority over price. Major tech customers could only receive 60 to 70% of their needs in the fiscal third quarter overall. And unmet demand will continue to roll over into future quarters. Tight global supply is expected to easily stretch out into 2028. And this quote from SK Hynix says it all right below that. It said their chairman said that he's noting that customers are requesting 5-year memory supply volumes that are 5 to 6 times higher than current levels. Just think about that. We know that customers today can only get 60 to 70% of their demand met, but they're requesting volumes to be 5 to 6 times higher than we're seeing today. That alone should just show you the amount of exponential growth that we're going to see in the market, what they're anticipating to see, and the exponential demand that'll be needed from these memory companies. Again, supporting their long-term valuation, supporting the long-term investment in these companies. And then finally, they say if the model becomes more permanent, memory industry's historical boom and bust cycle of expanding capacity during upswings only to cut prices when there was too much supply in the market, they're saying this could be moderated. Moving forward, competitive advantage will depend less on securing peak quarterly pricing. It will depend more on your ability to lock in customer relationships, secure capacity, and execute next generation product roadmaps earlier than your competitors. But guys, that's the sign and signals that we're seeing in the sector. These contracts are expanding just beyond the big players into the regional players as well. And overall, you know how I feel. This gives excellent revenue visibilities for the company. It protects the pricing. There's pricing floors in here, and it protects the valuation and moving away from the historical boom bust pattern that we've seen with this sector in the past. So in my opinion, this might cap some of the explosive growth that we've seen, price growth and the pricing power, but it gives stability to the sector more so than we've ever seen in the past. And in the long run, in my opinion, that is a very good thing for the memory players. So let's shift gears a little bit. Let's talk about some of those scary headlines that we could see with the Q2 13F filings. This is one of them. You can see Druckenmiller and his Duquesne fund, they load up on Amazon, AMD, while dumping some chip makers. And if you read the article, you went in and you see the second paragraph. It says that Druckenmiller aggressively reconfigured his exposure to semiconductor and artificial intelligence players. Duquesne entirely liquidated its stakes in Broadcom, Intel, and Micron, and they initiated new positions in AMD and TSMC. So you see that in the surface, and you're like, oh no, this is a major player in the market. They're liquidating their position in Micron in the second quarter. What does he know that I don't know? We also see that David Tepper, in his fund, he trimmed about 40% of his holdings in Micron as well in Q2. So if you see that on the surface, it could create panic. But I want to go through actually all of the moves that we saw, the major moves at least that we saw with the Q2 13F filings and what it means for Micron. Because overall, guys, when you take a step back and you look at all of the plays, I think there's one clear takeaway, and I have it down in the left-hand corner. It's that top-tier institutions, they aggressively accumulated Micron in Q2. They were not walking away from the stock. Some long-term holders, they took profits, no question, like David Tepper would be one, took profits after a historic rally, but it's still a massive position in their portfolio. And Duquesne, they executed a quick in and out tactical trade. Let's walk through it all together because I want to start up top with the major accumulation that we saw in the 13FQ2 holdings. The biggest one is Cotu. They're managed by Philippe Lafont, and you could see their positions. In Q1, they had just over 165,000 shares in the portfolio. In Q2, they moved to 3.1 million shares. So that's almost close to accumulating 3 million shares overall. Massive share change. The Q2 value now is $3.63 billion. It's about 7.5% of the entire portfolio for Cotu. So it's a 19x increase in shares. It becomes the third largest holding, and it's about 7.5% of the entire portfolio. That is a massive, major accumulation right there in the second quarter. JP Morgan Chase also had a huge jump, a 64% increase in the share change for their hedge fund, $29.6 billion in Q2 value. It's about 1.6% of the portfolio. That may seem small, but it's actually one of the largest top disclosed equity positions in the entire fund. So that's an enormous accumulation for JP Morgan with Micron. Deutsche Bank as well was a new position, a new increase, about $18.5 billion estimated value that they moved on Micron. It's a significant new exposure to Micron in Q2. Another major accumulation and bull flag for the stock. If we look at profit taking and reductions, I talked about one of them, but let's start with PrimeCap. PrimeCap reduced their holdings by about 12%. You can see where they went from just about 22 million shares to just over 19 million shares, but they still have close to 23 billion in the fund, and it represents about 6% of the fund overall. So yes, this was a significant trim, but this was not an exit for PrimeCap. They took profits off the table, but they still are a very major holder in Micron. And then David Tepper's fund overall, he started with 1.6 million shares in the Q1. In Q2, he's disclosed he has just under 1 million shares. So essentially a share change there. What he sold was just under 700,000 shares, about 41% of his position. But he still holds over $1 billion, 1.1 billion in the stock. It still represents over 14.5% of his entire portfolio. So he took major profit, but it's not a bearish exit in my opinion. Sold 41% of the position to take money off the table, but it's still his second largest holding in the entire fund for Micron. And we saw Duquesne, the Duquesne family office managed by Stanley Druckenmiller. He liquidated his position in Q2. So he had 23,000 shares for Micron in Q1, liquidated it all, went back, rotated it back into Google, according to the records. So this was a tactical reversal. It was like a quick entry and a quick exit. He established a small tactical position in Q1 and then exited it in Q2. It was essentially 0.227% of his portfolio. So the article itself could be scary, the headline about major change, but when you actually look about what the amount of change that actually took place and the liquidation that took place, it's not a massive move at all. So I wanted to put this into the right context for you guys so you didn't have anxiety and get worried about major whales that may be moving the trade with Micron overall. So as we look at the week ahead, there are a few catalysts we have to keep our eye on, a couple price zones that we need to monitor from Micron. So if I pull up their candle chart, we can see what they did on Friday, and there's a few areas of resistance that the stock kind of pushed up against. You can see where they gapped up originally. Right out of the get-go on Friday, this was the confirmation signal we saw. It immediately gapped up to a high of 984 throughout the day. Saw a bit of profit taking, but it rallied right back up to about 984. And then the stock trailed down. It hovered in this 970 range here overall, just for a little bit. Had a bit of a dip, rallied back throughout the day, but this stretch right here that I'm circling is the 960 level of support. I think it's just around that kind of low 960s, mid to low 960s overall. And then finally, the last 20 minutes, the stock rallied up to finish above 971. So my outlook for next week is let's see how we open up on Monday. Let's see what the momentum looks like for the Asian providers when they trade tomorrow night, when the Kospi and the Nikkei 225 open. Is the momentum strong? Do we expect to see positive momentum spill over into our markets? We'll look at the pre-market and how that's trending, because all the signals right now look very strong for Micron. So we very well could see a gap up. If we can hold that gap up without profit taking, I do think this stock has a chance to break the psychological barrier of 1,000 next week. If we start to pull back with some profit taking, I think this is the range I'm circling right here that we could see Micron start to hover towards, be the floor for the stock again in that low 960s, mid 965 overall. So it could reset here and hold until we can break forward again. But overall, guys, I do think, in my opinion, that we're seeing kind of the stock and the sector enter back into a bullish run. I think all the signals in the demand in the market are clearly showing us that the memory trade has officially evolved. When you take a look at that New Street research and how they said this is the death of the traditional cycle that we see in memory, that we're going to break the cyclical pattern of boom, and they're saying Micron could reach a $2 to $3 trillion company. You see DigiTime saying that the long-term arrangements are moving beyond the big three. And when Coatue builds a multi-billion-dollar new position in Micron in Q2 based on their 13F filings, Wall Street is sending a clear signal that the structural re-rating for this sector is underway right now. So I couldn't be more happy with what we saw last week overall. It was awesome to see these stocks break out and start to move in green, with green candles day after day. That's what we have to keep moving forward. We have to keep these stocks moving in the right direction. Let me know what you guys are thinking. What are you doing? Are you holding your memory positions right now and looking forward to just more green candles, more growth overall as we get into this multi-year run that'll take us out through 2030? Or are you looking to take profits as these stocks start to reach towards those all-time high levels that we saw earlier this year back in June? Drop your strategy in the comments below. Let me know what you're thinking, and make sure you hit like and make sure you subscribe to the channel. Guys, I'll see you on the next one. Take care.